focusing on nature finance and insurance. And those insights will come mainly as in the form of policy recommendations. And the second session of the day, we will have a different format. This will be on posters. And you are invited to join all the posters that you would like and discuss with the presenters. Yeah, I think this is as short as that for the agenda. Yeah.
Good morning also from my side. It's so lovely that you are all here. It's brilliant. This is the third day and you are fully committed and curious to learn another stuff. So this is lovely. So welcome back. I hope you have had a nice evening yesterday. A good time with your friends and colleagues and so on. So we will continue today with the first session that will be dedicated to an overview about our sister projects and what they are recommending in terms of the policy and so on. So this is going to be super exciting. But I am really happy that I have the opportunity. I was looking for that for a long time to introduce my dear friend, Angela Falconer, as the moderator of the next session. Angela is a brilliant scientist. She started many years ago with the climate policy initiatives. We used to work at the same institution, Fondazione Enrico Mattei at that time. And she's currently an independent climate finance consultant. She's based in Venice. And she's specializing in climate policy and finance. And she's now helping, and this is why I need to read it, it's ClimateShot Impact Investor Coalition. And she's helping to set up the nature and climate impact assessment and investment opportunities. And Angela, we are also keen to learn about this. Click, right? Thank you very much for being with us, and over to you.
Thank you very much for the very kind introduction, Jaro. I'm going to use this advantage of this stage to get a little taller. So great to welcome you all today to this final panel session, which I think is going to be really exciting and important to bring together all of what we've learned in the last 2 days. I don't know about you, but my brain is buzzing with everything I've heard from all of these different examples. So what we really want to do is take a little recap on the 5 Horizon projects, hear the key policy recommendations, and really look forward to what we can take forward as key policy recommendations, opportunities for implementation to really look on how we can mobilize capital and manage risk to scale nature-based solutions at the pace that is required. So I think we want to hear, I think we're going to have this from the esteemed panel, the sense of urgency to move forward from this now at this stage. So we'll hear about the technical solutions, innovative insurance, risk transfer solutions, blended finance and public-private partnerships. But we'll really be looking to highlight the opportunities for EU, national and local level policy and implementation to facilitate implementation. We'll hear from 3 esteemed panelists who will reflect on and respond to these recommendations, reflecting on what's feasible, what's urgently needed, and also sharing their experiences from implementation on the ground. So really helping us to identify which concrete actions we need to collectively prioritise to scale at the pace required and more systematically. So we'll have Dr. Kirsten Dunlop, CEO at ClimateKick. We'll have Ms. Vanessa Bruynooghe from DG Clima. We'll also have Ms. Sirpa Pietikäinen, who is Finnish member of the European Parliament. So really exciting panel. I think will be provocative, and what we also want to do is really get input from you as well. So we will come to you for questions, but also for your recommendations on where we need to focus efforts, what you've learned and what you're synthesizing as your next steps as well. So without further ado, I'd like to ask all of the presenters to come up onto stage. And I'll introduce them one by one. We'll have the first presentation from the NATURANCE project from Bruynooghe. So over to you, and I'll give you the clicker. I'm going to be a little strict on the timing, so 5 minutes each, so we can get to the discussion. Thank you.
Hello, can you hear me? Okay, perfect. Good morning. I'm going to try and sprint through some of the insights that we've gotten on risk transfer for the NATURANCE project in 5 minutes. Just a quick reminder on the distinction between risk transfer and risk reduction that we've extensively discussed in the last few days. And the insights that I'm sharing with you today come from 3 of NATURANCE's 9 innovation labs. You're already, of course, familiar with IIASA's innovation lab on wildfire risk and CMCC's innovation lab, which focused on community insurance and controlled flooding. Now, LSE's lab, which we haven't spoken about today, focuses on how the insurance industry can leverage the UK's biodiversity net gain regulation to encourage the adoption of natural flood management solutions in urban areas. Now, these are the core findings that we've distilled from these 3 labs, which is split into considerations and strategies. And considerations are factors that we think should be acknowledged and integrated into risk transfer design, while these strategies speak more to the how that could be integrated into risk transfer design. Now, we're all familiar with the broader challenge that we face, which is we're increasingly exposed to climate and nature risks. And when these risks become unaffordable, insurers have no choice to accept to pull out. And this can further drive economic inequities. Now, so in terms of how this affects risk transfer design in the context of nature, it shows up in 3 different ways. Firstly, risk transfer is subject to broader policy trade-offs. For example, in England, we face quite a lot of pressure on land use between building housing or using land for nature-based solutions. And what risk transfer can incentivize depends on what broader policy incentivizes. And even if you do incentivize nature-based solutions, what makes for an appropriate nature-based solution depends on the stakeholder that you ask. So in the case of wildfire, a fire manager might recommend forest thinning, but an ecologist might argue for preserving the undergrowth. And finally, we all know that risk is not equally distributed, which means there's always a need to consider who is at risk and who might need more support, as well as who benefits the most. Now, in terms of some of the strategies that we've identified from the NATURANCE project, we of course have incentivizing NBS adoption through risk reduction. This could be, for example, integrating premium discounts into underwriting. This we've already discussed extensively in the last days, but I want to touch upon 2 of the emerging solutions. Firstly, using risk transfer as a compensatory mechanism, which is a core of CMCC's innovation lab. I would suggest reading it when you have time, because what happens here is at a river basin level, when you use controlled flooding, you need NBS adoption upstream, which can hold the water. And those who benefit the most from this reduced risk are those downstream. Therefore, when premiums are calibrated according to who benefits the most, premiums from those who are downstream, which are higher, can be used to compensate land use owners to implement NBS and also account for the disutility because they often have to convert agricultural land. So in this way, risk transfer can actually support the implementation of NBS through a compensatory mechanism. Finally, there are, of course, broader challenges to nature-based solutions that we're all familiar with. There's the risk of failure or underperformance. And of course, there's certain uncertainties to the returns on NBS from an investor's perspective. We just don't have the track record and data like standard or other forms of risk reduction and infrastructure. So what was identified in the LSE lab specifically is bringing in risk transfer as a de-risker for investment. And this happens in 2 areas, both at the construction phase of a nature-based solution, as well as over the lifetime of a nature-based solution, both in terms of performance or to help compensate for damage to nature-based solutions. Such solutions are already emerging in the carbon market, but there is potential for more innovation here. So in short, what I want to say today is that risk transfer is not just a financial mechanism to manage risk, but it can be used alongside NBS to result in more equitable and resilient outcomes. And what we implore policymakers today is to focus on creating an enabling regulatory environment to make this happen. and for financial stakeholders to continue to innovate on how they can creatively use premiums, levies, and guarantees to support NBS adoption. Thank you very much.
Well done, Pranav, very nicely on time, and thanks a lot for those interesting ideas. So now I'd like to turn to hear from the SOTERIA project from Alexander Shushenko from the Helmholtz Center for Environmental Research. Over to you.
Yeah, thank you for inviting and having, I think, all of us. It's a pleasure to present some key findings from our project. Yeah, actually, like the key messages from what we got from all our activities. Sorry. I think it's some of them are obvious and some of them are, let's say, very specific to each case. Like, I mean, like that we found out like the demand side is prevailing. If you're talking about the barriers for closing the climate insurance protection gap, it's like we need to think about innovations at scale, not like one solution, as we discussed yesterday during the breakout session for Valencian case. Like if we're thinking about one solution, restoring the wetland, it doesn't help much. It should be like scaled up through the region. Then it will be like more or less feasible and functional. Let's say you see here all our case studies and what kind of innovative solutions we were thinking about and we were implementing. Let's say you see the term sustainability as the key in almost all cases. You also see like the key, let's say, concept that we choose, like the shared resilience. This was also introduced by IOPA, and we try to put this emphasis where we could in all our cases. So we have like split it, the recommendations into the different stakeholders groups, like for the policymakers. Let's say there are specific problems related to the loss data sharing. If you take a look at different countries, you see different landscapes and circumstances, but overall it's about different barriers. For example, in Germany, it's about like the ownership of the personal data, and it creates like a certain barrier. So for the policymakers, it should be one of the key areas of concern. Also, like the climate, let's say, common agriculture policy should be used wisely because, let's say, if you're talking about the farmers and climate insurance for farmers, they are aware that they're receiving subsidies from the first pillar. So that's why for those who are thinking about how to subsidize premiums, let's say the second pillar is maybe like the most important one. For insurance sector, it's also important to pay attention on efforts that are being taken by the clients if they're going to reduce risk. So there should be some kind of reward for those activities, and clear communication. This is very important, especially in case of farmers, because the channels and the messages should be defined and refined, so to speak, like in a very sophisticated way. For the financial sector, again, it's one of the key challenges. If there is no money, so nobody will be introducing or implementing some risk reduction measures. So financial sector should also step in and provide some clear, let's say, message and real funding. Also, it's about, let's say, application of innovative IT solutions like satellite data, like remote sensing and so on and so forth, because this will reduce, let's say, the uncertainty, and this will increase the trust. Let's say for the communities, it's important to work together with all the stakeholders to understand jointly and to elaborate jointly like the framework for this shared resilience with the KPIs, for example. And also, if we talk about like the risk awareness, it's also key because let's say we have to talk to the farmers, we have to talk to the people living in the cities, and we have to explain to them, what does it mean risk and why it's important to act. I think that's it. Yeah, thank you.
Fantastic. Thank you very much. Lots of food for thought there. And I think we'll hear reactions from the panelists on we can prioritize. Katie Bruynooghe from PIISA project, we'd love to hear what you have come up with in your project and some of the key recommendations. Thank you.
Thank you, and good morning, everybody. So I represent the PIISA project, and the PIISA stands for Piloting Innovative Insurance for Adaptation. And the PIISA now there's something missing in the slides, but anyway, the PIISA policy brief has 5 different topics, and here in this presentation I have picked 2 recommendations that relate to enabling parametric insurance and justice issues related to adaptation insurance. So the first one is enabling parametric insurance. So as we have discussed here in this conference, insurance allows the risk to be shared between many actors. Shared risk means greater economic stability and faster recovery after loss event. However, this requires that the society is able to manage climate risk to a level that ensures insurability. Insurance companies can also incentivize and promote risk reduction. So in order to do this all and to improve the low penetration rate of climate risk insurance, insurance companies need to develop new and affordable products. This requires a regulatory environment that allows products like parametric insurance. And the challenge is that parametric insurance is not recognized as a valid type of insurance in all countries. Thus, we recommend that all EU countries should develop an harmonized regulation of parametric insurance product to enable their effective use. And then to the affordable insurance for everybody. So justice issues related to adaptation insurance need to be addressed. And the impacts of climate change do not hit everybody equally. Certain groups of people, locations, and regions are more vulnerable than others. Insurance premiums may not be affordable to the most vulnerable groups. And the challenge is how to ensure affordable insurance for everybody, taking into account the most vulnerable groups. And PIISA recommends that national government should make climate risk insurance more affordable by a subsidy targeted to low-income households in order to, and other groups vulnerable to climate risk. But we should make sure that the subsidy is not embedded in insurance prices to avoid distorting the price signal of risk. The subsidy can take various forms, such as vouchers. And I have presented 2 recommendations of the PIISA policy brief, and it has been published today, and it contains more recommendations, and you'll find it online. And there are some printed copies in this room in the back. And after all the presentations, you will have a QR code and access to those policy briefs we are presenting.
Fantastic. Thank you very much, Katie. And now we're going to hear from the Invest for Nature project from Lydia Leinhardt. Thank you, Lydia. Over to you.
Hello, everyone. I'm today presenting our brief on unlocking private capital for nature-based solutions, which is summarizing the insights from a survey with the private capital community, especially credit institutions, investment funds, and the insurance companies' investment decisions. The main author of the brief is actually Linda Romanowska, who is a sustainability advisor and a member of the EU platform on sustainable finance. But she's based in Australia, so as I helped her write this brief, I'm here to present today. And the survey aimed at identifying main barriers and enablers for investment and drawing fitting policy recommendations. So the barriers are numerous, and the most important one mentioned by the investors in the survey were regulatory hurdles. But this means a lack of clear and consistent goals in national and regional policymaking, because of course, clear long-term goals in policymaking also provide stability and help de-risk investments. The next barrier is higher risk profiles, because nature-based solutions come with sometimes uncertain or long time frames, and also they have a limited track record and are quite novel in the investment space, and so many investors are wary of being the first movers here. The next thing is tied to that is data deficiencies. There are still limitations on assessments and valuation methodologies which hinder due diligence. And then there's revenue uncertainty. So as I said, long time frames and some revenue streams are unclear. And then also high transaction costs, which are mostly due to the small scale of those MBS projects. So most projects are only in one municipality, one tiny project in a certain region, and connecting projects or doing larger scale projects would help attract easier financing. As enablers were identified certain sectors, especially agriculture and the urban sector. And then another enabler is sustainability aligned capital. That means there are now a number of investors, investment funds, and also like certain funding opportunities from banks that are interested in sustainability projects, especially if MBS projects are also tied to climate change mitigation, adaptation, and biodiversity goals. So a key takeaway here is to always highlight also those co-effects of NBS projects. And then another enabler is our green or sustainability bonds. So this was really interesting from the survey, even though sometimes research is looking into like novel financing mechanisms. Actually, the investors, a lot of them said they don't really want novel financing products. They are actually quite happy with the financing products that are already out there. Just make them green. That was kind of one message. And so they have a high preference on green or sustainability bonds, which is understandable. But it makes a bit, it's tricky for the MBS project providers. It doesn't work for every MBS project. For instance, it might work for some stormwater management MBS that can then collect fees and that way refinance and pay back the bond. But it doesn't inherently work for every MBS project. And then onto the recommendations following out of these insights. There are some local ones integrating MBS into urban planning and zoning. So we have a project in Poland where the regulations that are mandatory biologically active playground areas in building projects are now catalyzing market interest among housing developers. So there you can see how policymaking can attract a lot of private money into MBS. Then also collaborate with private investors and, as we said, develop green bonds where feasible. And then on the national level, there's important to have clear national biodiversity and MBS targets. As mentioned earlier, those clear targets, especially if they don't change around that much, help create investment security. integrating MBS into climate strategies to foster synergies, and then also biodiversity impacts compensation. This relates to nature credits. So if there are schemes for this, this also attracts financing into MBS. And then probably the most interesting ones are the EU-level recommendations, is developing standardized monitoring and evaluation methodologies to reduce data deficiencies and transaction costs. Then creating biodiversity compensation offset mechanisms. So nature credits were a lot talked about in the last days. There's now also the EU roadmap to nature credits out there from the Commission. So that's definitely something that has to be discussed and developed. But of course, being careful here that nature credits are then not used to just greenwash and not used to hinder real change. This would be very important for unavoidable damage. Integrating MBS into the broader sustainable finance policy landscapes to harmonize criteria across the different regulatory packages out there. And then, of course, the most important one mentioned by the investors, creating regulatory clarity to reduce uncertainty. For instance, we had quite some talks with banks, and they said that the scope reduction in the CSRD, which meant that now less companies are having to report under CSRD, actually puts a burden on the banks because they themselves need to report to the CFRD, and they need to obtain information from their businesses. And so now a lot of banks are quite annoyed with the scope reduction because it puts the burden on them to obtain the information. So the scope reduction of the CSRD might overall don't necessarily mean that the businesses have to report less. They just now need to report rather to the banks than to the regulators. Thank you.
Thank you so much, Lydia. Some really good concrete recommendations that we want to hear then from our panelists on the feasibility and how we can get behind all of that actually happening. Davide Chiaramonte from ClimateFit is our last presenter. Over to you, Davide. Thanks.
You. Thank you very much. All right, yes, from ClimateFit. So ClimateFit is quite different from the project we heard about because it's the first project specifically on adaptation finance. But of course, it's really intertwined with nature-based solutions. I'm just gonna present these slides that very quickly, just to give an overview and to really understand the structural difference that there is between the funds that flows into mitigation and the funds that flows into adaptation. So in the red circle, you can see the structural disparity, which is an issue. And we tried with our policy recommendation to tackle this issue onto three levels, which are of course, the European one, the national one, and the subnational, so regional and local one. Starting from the national governance, level of governance, our main recommendation is to establish national adaptation investment strategies to be paired with the national adaptation plans, because of course, one of the main thing is to going down into details and translate all the high-level pathways of the national adaptation plans into real investment strategies. So we think that these framework can help establishing a long-term framework, for covering whole climate hazards. We think that in these strategies, we should embed the social rate of return to internalize what is usually not considered in the balance sheets. And then, of course, it's very, very important to deploy financial incentives and non-financial incentives. So these are the main enablers for creating an effective investment strategies. Quickly moving, sorry for being so quick, on the EU level, we think that on one hand, the European institutions should enhance the transparency framework. So developing guidelines for integrating all the adaptation co-benefits and not just risk exposure, because the framework now it is very much focalized on risk exposure, but we need also to include all the other co-benefits in these evaluations. And of course, also integrating adaptation efforts into the corporate transition plans, which is very important. On the other hand, from what concerns the European taxonomy, which is being affected by the introduction of the Omnibus Simplification Package, we believe that we need to develop a more granular classification system for identifying all the adaptation or resilience enabling activities, expand the coverage of the taxonomy to cover all climate related extreme events, and not just the one related with the water. And then it is very important, of course, also to leverage the public funding for adaptation investments. Now, since I've been quite quick, I guess, I've mentioned 3 levels of recommendation: national, European, and local. But in the slides, I didn't put the local ones. But for us at the local level, the keyword is structure engagement, and to have an effective engagement, public authorities should engage before even the creation and the concept of the adaptation project with potential investors. That's key. In ClimateFit, for example, we developed these local resilience task force, which are a feature of the projects, a very important feature to us, which brings together at the same table public authorities, financial operators, and also other stakeholders. And these are very, very interesting and effective ways to tackle altogether the need of closing the adaptation financing gap. And together with the local resilience task force, there is also in ClimateFit the institutionalization of the European network of the local resilience task force, which is again another opportunity for bringing together public authorities from all over Europe and potential investors from all over Europe to discuss how to finally close the adaptation financing gap. And I would say that's it for my side. Thank you very much.
Super, thank you very much, Davide. So I think we've heard a recap of the technical solutions, but we've also heard about the implementation pathways as well, what change needs to come in policy, regulation and financial practice to move from the design and piloting to more systemic change. So maybe just one last round of applause for all of our presenters and keeping fantastically on time as well. And please talk to them afterwards about their projects. But we're now going to do a little switch out and get our panelists up onto the stage to reflect on what we have heard from the presentations and from their experience on the ground. So one more round of applause for our presenters. Thank you. So at this point, I'd like to invite our panelists to come up onto the stage, please. And while they're doing so, I'll introduce each of them. So we have Ms. Sirpa Pietikäinen, who is Finnish member of the European Parliament since 2008, I think, former member of the Finnish Parliament and former Minister of Environment for Finland. So really glad to have you here and hear your reflections on what you've heard so far. Then we have Dr. Kirsten Dunlop, is Chief Executive Officer at ClimateKIC, Europe's foremost climate innovation agency and community, leading many interesting initiatives, including the Zero Cities project. Kirsten brings over 30 years of experience in catalyzing systematic transformations in a career that spans the insurance industry, banking, academia, and consulting. And Kirsten serves on many advisory boards, is a recognized leader at the European Commission Economic and Societal Impact of Research and Innovation Expert Group, PIISA. It's a mouthful. And then last but not least, we have Ms. Vanessa Bruynooghe, who is Policy Officer at DG Klima, focusing on finance and the EU's climate adaptation mission, working with regional and local authorities financing adaptation projects, promoting strategic planning and climate resilience and nature-based solutions. So thank you so much for being here today, and really looking forward to hear your reflections from the presentations that we've heard today. We, over the past couple of days, we've heard a lot about promising signals about increases in the EU budget for biodiversity planning, how we can bring national plans for MFF implementation. We've heard some interesting ideas around mandating insurance that is at the national level. But we've also heard about the challenges of affordability, of transition, of short-termism in certain industries, and of the huge amount of nature-harmful investment that is going still channeling and through harmful subsidies as well. This discussion will come around three dimensions or tensions that cut across all of the projects. So we'll first look at the incentives for investment in risk reduction. We've heard about some of the projects, some of the innovative mechanisms. How can we get that to work at scale? We've heard that there isn't a lack of capital, and we need to create the investable conditions. What are some of those plain vanilla instruments that can be greened, and what's the role of the public sector? And then finally, around research, technology, data, how can we further stimulate that to increase investment in nature and adaptation? So I'd like to first hand over to our panelists to give a first brief introduction of their focus areas, their initial thoughts on the opportunities that have been presented to ramp up investment in nature, finance and insurance. And I'd particularly like you to maybe reflect on which you would see as your priority recommendations to take forward in the short term, which are realistically actionable in the next policy cycles. So with that, let me first hand over to Dr. Kirsten Dunlop for your reflections.
Is this working? Thank you very much, Angela. Good morning, everybody. First of all, thank you very much to the presenters and panelists for a particularly rich wake-up call, one after the other, and very consistent, actually, in the messages coming through. I'm speaking from the perspective of Climate Kick. For anyone who doesn't know Climate Kick, the Kick stands for Knowledge Innovation Communities, who are one of the first wave KICs that were set up by the European Institute of Innovation Technology, matured through the end of that program, and now really operating as a European-founded asset focusing on transformation where innovation is the lever on both mitigation and adaptation, and working across the world in 60 countries now, with a very keen interest in the role that Europe is playing. In our case particularly, we are indeed responsible for playing a role to bring a consortium, large consortium of actors together across Europe in 4 of the missions, actually. One, the cities mission, the other, the climate adaptation mission, in particular the program called Pathways to Resilience, which is working with the most vulnerable European regions, really thinking about how do you take a planful and uncertainty management fit approach to adaptation and resilience. So not just what's the roadmap, but how do we construct capability and ways of thinking about this that enables us to really equip communities and infrastructures with the capacity to continually reinvent adaptation. So it's resilience by design, which is non-trivial. And this whole question of how we get financing mechanisms to similarly understand and come to the table that we're not talking about single stage solutions or one-offs. We're talking about a transitioning of the economy en masse for resilience by design. So I'm very, very interested in what I've heard this morning. There are indeed a lot of patterns across this, and perhaps we'll get to this in the panel discussion. I think one of my biggest questions, probably the one question I would ask to everyone, and what we've been hearing from a research perspective, is the point about resilience and adaptation is the unusual combination of scale and economies of scale, especially if you're dealing with large-scale financing, adaptation financing solutions, and the peculiarities and particularities of context-specific needs, and highly context-responsive mechanisms that are also societally specific, and hence such the big issue around distribution and affordability. And one of the questions that I think is a bit missing, perhaps this is a very, very informed audience and knows this well, but I'm not sure how many people understand what parametrics mean and how they work, nor indeed understand the wide and rapidly widening landscape of the combination of human technologies and digital technologies and space-enabled technologies to really manage the relationship between aggregate scale effects and economies of scale and very specific responses. And I think there's a real question here about, we now have the power to do this well in very interesting ways, but it's not often discussed as one of the kind of active investment edges for investment in research and innovation. We tend to have financial instruments that are out of touch with the speed of what's possible to combine, think of it like a T-shape, combine this kind of economies of scale across the whole European area where we could actually afford resilience and really specific, context-specific affordable responses in place and in situ.
Fantastic, thank you very much. So yeah, now I'd like to go to Vanessa Bruynooghe for your initial introduction remarks. And I think you have a couple of slides to show us about what you have been doing with the climate adaptation mission.
Yes, thank you very much. Thank you also for allowing me to present a few slides, because today, I mean, the festival is really extremely important to us. I work with the European Adaptation Mission, and so much of what is being discussed really is at the heart of the European Adaptation Mission, including the project that Kirsten was mentioning, the Pathways to Resilience, and so including the projects that have presented their policy briefs today. So it is absolutely fantastic to be here. If I may bring up the slides. Yes. So a few years ago, a number of missions were established, one of them being the one on adaptation to climate change. And here you see an overview. It's a compressed slide because I wasn't allowed many slides, of what the mission is all about. So on the left, you see the current projects that the mission, the adaptation mission, is funding under Horizon Europe. And if you have very good eyes, you will see ClimateFit, you will see SOTERIA, you will see PIISA, you will see P2R. So we are very, very pleased, very happy, very proud of all the work that is ongoing in the last few years on climate adaptation. So that is very important in the mission. That's really at the heart of what we're doing. On the right, who are we doing it for altogether? It is for the local and regional authorities in Europe. So in the mission, we have asked regional and local authorities who is committed to becoming resilient and who wants to go the way with us. And 326 have stepped forward voluntarily and have committed to work on climate resilience all together with us in the mission. You see a map there, but it covers around 40% of the EU territory. So a huge amount of municipalities, cities and regions, so of all levels of local authorities are really in the mission. And in the middle, you see our mission implementation platform. I will come back to them because they've done something very interesting on financing. So I would like to highlight a few lessons we've learned from that. So the mission implementation platform is called MIP for Adapt. They coordinate all the mission and they do also support, including a kind of technical assistance, but it's really light touch technical assistance. And at the bottom, you see the national adaptation hubs, which is a new thing we're establishing in every single member state. We're establishing an adaptation hub to really work on the governance, on working on improving the governance between all the levels, EU, national, local, and bringing everything together to work on climate resilience. I'm not going to go into very much detail on the projects we have on financing, but I'm very, very excited that ClimateFit has gone through so much work already and is really at a stage where we're really seeing very interesting knowledge and testing coming out of it. So ClimateFit was our first project on financing under the work program 22, together in the same year with the topics of insurance, where we very much welcome PIISA and SOTERIA to start the work. You may know that from 2024, we are looking at projects that will work on the bankability of combining mitigation and adaptation. Because this is an obvious way forward of financing adaptation, it is to combine it into mitigation. And we will have ClimInvest, Rising and Blossom working on them. So really hopeful that in the next edition or very soon, we will be hearing from them. For the 2026 work program, we are working on what Lydia was mentioning, on Lydia and Davide, on bringing the social return into the economic discussion of why should you invest in climate resilience. And we're looking for 2 projects that are now being selected to quantify all the benefits of investing in adaptation. Not only the obvious returns, but to quantify every single benefit it brings to anybody directly or indirectly. And we really believe that if you manage to quantify all the benefits, even the peanuts, you will come up with a figure that should be able, hopefully, to balance out the cost of the investment. So 2 projects will be working on that. We're very excited to see what that will bring. Because it's all about quantification, isn't it? If you cannot show the investors a number, you will not convince them. And then I will talk in a little bit more detail, because this is really advertising I'm doing now, for the call that we have open under the work program 2026. So if you allow me to do a little bit of advertising, because I'm very excited about this one. This is what we're talking about today. This is about financing the difficult projects, the local adaptation projects, the local innovative adaptation projects, by combining public and private money. And we see everybody talks about it. It's an obvious way to go forward. But why isn't it not happening? Why is it not naturally taking place? What are the barriers, and what are we going to do about addressing those? Because in the mission, we are about testing and overcoming barriers. It's not about theory. It's about looking at our regional and local authorities. What are they doing? Why is it not happening, this combination of private and public money? So we're going to have a project of 20 million euros for a coordination support action that will pass on the grant. So it's with financial support to third parties. The project will pass on a grant to local innovative adaptation projects. So that is so to speak, it's going to be a 2-leg project that we're doing. With, on the one hand, as you can see there, I hope you can read it, it's pretty small, the Horizon Europe grant that will go to the consortium, and that the consortium will then pass on in a sub-grant to the adaptation projects. That is still very much within Horizon Europe and within the way Horizon Europe works and the way you all know how it can work. But what we're doing is we're combining this with a parallel stream of money with banks, with the banking sector. So we want these 2 streams to come in at the same time. So the EIB will, for this, provide intermediated lending for adaptation, specifically with sharing their knowledge on adaptation projects, to national promotional banks or any other bank that is interested in working on this. And they will then provide the loan to the innovation project. Why is this a bit different? Because usually it's the other way around. Usually a public grant is given first to a project. And then we say to the project, now you go off and you find some private money. But then when the project knocks on the door, private investors look at it and say, well, your project ticks very nicely the boxes for the public grant, but this is not bankable. This is not what I am looking to invest in. You're coming to me way too late. You mean, what do you want me to do with this?
Yeah.
So we're trying to do it the other way around. We're saying the projects will go to the banks and speak to the banks first. Together, they will look at how can we make this into something that could be bankable if a public grant comes on board as well.
Fantastic. Yeah.
And then they will go to the consortium and they will apply for the grant. And the idea is that the consortium will work together, obviously, with the banks and the EIB to make sure that this financing actually happens.
That's really exciting. So I think there'll be a lot of people talking to you after this and excited to be part of that. Thank you very much, Vanessa. And I think now we'll move for initial remarks from Sirpa.
If I may show us also the next slide to make the promo complete. We have had the info days where we've explained all of the calls, but we'll have a deep dive session specifically on this new call, normally on the 26th of February. The call is published and the deadline for applying is the 23rd of September. And I'm really, really looking forward to everybody in the room to get excited about this and talk to other people about it. Because we're looking for a consortium that has the appetite and the courage and the enthusiasm to work on financing adaptation and on overcoming the barrier and saying, how can we combine public and private money? How can we make this work? So we're looking for a consortium with expertise, not only in Horizon Europe Cascade funding, but also in adaptation and in financing. So very much inviting everybody to talk about it and get together and looking forward to consortia coming forward.
Very interesting. Thank you, Vanessa. Sirpa, it would be great to hear your reflections on what you've heard until now from the presentations and also the other panelists on where you see the priorities going forward.
Thank you, and please feel free to leave that information for the audience while I'm speaking. First of all, thank you for the enabling policy framework ideas, what you had already. And now I would be very concrete. To me, the first question is, what next, who does, and how? How do we sort of make this kind of a network consortium of these ideas? The financial sector, different actors there, the European Parliament, and then the cities especially. Because there's quite a lot of to-do boxes. I like many of your ideas, but there are quite a lot of to be done to put them in fruition. First of all, one is that we are having, we just discussed about the climate adaptation program coming from Commission. What this means to that? What do we concretely propose as amendments from the Parliament there to have this regional outreach and cooperation, to have the data, a data platform, to have some funds to develop how you sort of combine the different parts of the data, like the natural data, and then the financial data. It's doable and you can use AI and all that stuff. Then it is the preparedness by design commission program. It is the disaster risk plan. What do these means there? I have some ideas. I won't go now in detail because that would take quite a lot of time. Then a lot of things I would like to ask you to be on board. We should have a network for that. And that is what is the next phase of sustainable finance. Let's face it, this is dead and buried because it came quite a bad result after Omnibus is what we have now with the 5 pieces of legislation. But it is like it is in politics. First you had resource efficiency, then the circular economy. First you have capital markets, then now you have savings and investment. Same dog, different name. So we shouldn't call it sustainable finance or taxonomy. You call it whatever feel free to name the dog as long as it is the dog. Is it a preparedness or finance or readiness finance or long-term finance or whatever initiative? But we would need to get the DG finance and climate and environment together and some other resources to think about it. And that is a lot. What this means in MiFID, in solvency, in ECB work when it comes to banks' resilience and integrating the climate risks in there and all that stuff, plus then how to integrate the EEA and other sources, Copernicus as data providers. So that's why I'm my next question is how do we work together and with whom and who creates and sustains the networks, because they don't stay up there by themselves. I'm sorry, I do not have the answers, even though I raised my hand to be happy to be part of it. Then one point I would like to underline there, 2 points very strongly as policy issues. One is you need to have incentives and disincentives. You can't increase incentives in insurance sector, for example, so much that it covers everything. You need to have these incentives. So make climate and nature risks more expensive. And then at the same time with the fees and what was the proposal, more affordable to act now. Then you have big enough spread in financial terms that it works. So you need the both legs to be walking. Okay. Then about the cost. The Commission should have the cost of non-action and inaction. Please remember the 2 words. Non-action is you don't do anything. And the second that is more common, we are having the plans and actually a bit of this and that, but it is ineffective, not adequate. And that cost should be seen in this integrated preparedness by design, and it should be in the endless impact assessment list by the Commission, what we are having already now, because otherwise it's not taken into account. Then probably we should have a separate hubs on working on this. And then the big thing, can you create a group of you to have a roadshow in member states, in national parliaments, with national financial institutions, because the member states are the hard chip on this all, and you need to get the local politics and regional politics and the parliamentary politics to get and understand what is the scale of the risk, you know it, and what are the possibilities and the actions needed to push the governments. You need to act now. You can't set this on the back burner. And last but not least, but we are going to talk about it more in the future. Try to work with cities, ICLEIs, governors, whatever, and this is what is done to make a big hub of that, because if we can prioritize EU funding for those regions, those cities that act and get a better terms in finance, especially insurance, if this city is doing this and that, that could be something. And then it could be municipal green bonds, a swapping from climate to nature. So if you in ETS and others, you have the credits. Why don't you use these credits on nature-based solutions?
Fantastic. I didn't want to stop you, Sirpa, because I think that's really rich ideas there. And I think our panelists and the audience might want to react on some of those kind of provocations about how we can put these networks together to really move forward the hubs, how we can collaborate to come up with ways forward to implement what we know is needed, and bring together the elements of what Kirsten mentioned around technology and new financial instruments and approaches. So maybe I'd like to go back to Kirsten now, to hear, you've worked with the insurance sector for 20 years. I'd love to hear where you see the role in insurance in this moving forward. How can insurance actively enable this risk reduction?
So let's start. I want to build immediately on what you said, Sirpa, and come back, Vanessa, to your observation, because I think it actually really is very, very telling. I'm super excited about what it is that is coming out. This piece around needing to quantify, and really needing to show the business case for investment in risk reduction as somehow being an affordable move. The thing that I worry about is that that is framed within an assumption that the existing economy continues as business as usual, and we need to make the business case within the context of the existing economy. As soon as you actually acknowledge that we do not have an existing economy that is business as usual, and you begin to really recognize and pull in the reality of risk is status quo, and all forms of non-action and ineffective action are heightening the risk of status quo, then you start to have a business case without even trying. And this is where I think this is actually where the role of insurance needs to come in. So I absolutely welcome all of the raft of ideas around the ways in which the insurance mechanism, the core insurance mechanism, which is essentially understanding how to protect the future as an asset that you pull into the present. That's the point of insurance. You build resilience by pulling the future into the present, pricing it, and deciding what version of the future you want to live. But the problem is, all of those things are useful, but they are all a little bit like shifting deck chairs on the Titanic, to use an expression that is well known in English. You are moving things around, but the ship is going down. You need to, and I think this is where we really need to engage the insurance industry, and it's the reason why I'm alluding to the importance of economies of scale. Yes, at a member state level, but in a risk context, looking at the actual, for example, underlying water table risks we have, underlying agri-food risks we have, underlying catastrophic risks that do not respect member state boundaries. At a European continental scale, we have enough capital and enough value at risk to really mobilize the whole industry to come in. If we do it in a parceled way, individual cities, individual regions, we just don't have enough capital or enough fiscal room to make this work. So we need Europe to act at scale, to engage the whole industry, and that means we need to take the entire risk view for the whole of Europe, put it on the table with the entire insurance industry. There are 3 major retail insurers, add a couple more, you get to 5, 2 big reinsurers, or let's call it 3, that pretty much have 99% of risk in Europe that is insured. And there's unfortunately about 87% of agriculture and agricultural practice in Europe that is not insured. So that's an even bigger risk. Now, if you start to mobilize that, and this is where we are using the logic of the adaptation mission and the cities mission. So if I give you an example, one of the things that I'm also concerned about is how do you get cities and regions to talk to each other? These 2 missions really need to pull this together, because resilience for regions depends on the demand coming from cities for food, for types of food, for example, for infrastructure. Resilience in cities depends on whether regions are sufficiently resilient to contain them. So it's deeply symbiotic. But I'm just giving you one example of what, for example, we are taking action to try and do. Take all of the data on every single piece of physical infrastructure in every single city in the cities mission, provide it to the insurers that hold the premiums on all of that infrastructure, retail, commercial, offices, apartment blocks, everything, factories. That's all value at risk. The total cost of that, when you start to add in transition risk, political risk, and catastrophic risk, is immense. 1%, 0.1% of premiums under management now invested as a risk mitigation action to accelerate the introduction of resilient infrastructure, energy efficient buildings, buildings that are using nature-based solutions to capture excess water, etc., would reduce the underlying risk that all of that portfolio holds, would buy time for the insurance industry to stay in business, because it holds open the window of insurability, which is the relationship between how bad is the risk if you have to pay out and how much do people have to pay for premiums. And when that window collapses, i.e. it's just too expensive to buy an insurance policy, one of the things that I think very few people understand is our entire bankable economy collapses. There is no bankability if you don't have an insurance understrate. That's how Western economies were built. So my argument around insurance is, yes, it's fantastic to have a whole lot of insurance products. Yes, we should be using every single mechanism. For example, warranties on research and innovation tax credits, warranties on alliancing agreements, warranties on procurement, warranties on permitting, timeframes, approvals, etc. All of the things that smooth up and allow more liquidity to move faster into resilient solutions. But it's all superficial still, compared to the underlying issue, which is get the risk of not acting actually onto the balance sheet. And the business case is arguable within 30 seconds because it's so easy to say, oh, shit, well, actually, we don't have enough fiscal room for 3 Valencia storms to happen in any one member state in 1 year. We simply can't pay out. So it's, I think, the other thing that I would just reflect on, and this is where I want to come back to this question of parametrics and standards. The biggest challenge for any kind of insurance structuring is it needs workable data at scale with a certain degree of predictability and certainty. So now there are 2 problems here. One is there is no more, or the window of predictability and certainty is really closing. So that's where technology is massively needed. We have the Copernicus program, we have the opportunity to run parametrics, and the recommendation that Europe regulates for parametrics across every single member state, I would take that from the whole presentation and say, get that happening now. You've got 3 months, make it happen. It is the quickest way in which we use our own satellite technology and our own ground truthing in local resilience communities, things like Pathways to Resilience, all the programs in the mission where you've got community ground truthing. You can get insurance paid in micropayments instantly, and you already start to get money flowing in the system. That's a quick thing to do. But you need this whole of European standardization mechanisms to work. And then you need to combine it with the other big, interesting question for Europe. And I will shut up in a minute. I get passionate about this. I spent a long time working in insurance, first in Italy for one of the 3 big global insurers, which is European, and then in Australia. There is an enormous difference between the insurance world in the Northern Hemisphere and the Southern Hemisphere. In the Southern Hemisphere, insurers repair. So they are the single biggest holders of the materials markets in housing repair, in vehicle repair, and in agricultural restoration. Now, that means they're vertically integrated. That means they have enormous market power on actually bringing adaptation solutions quickly into play because it's in their direct financial interests to do so. In the North, for some very weird reason, we have a regulatory system that tries to separate this. It doesn't make any sense because the only thing that happens is that the taxpayer is the insurer of last resort. When a storm like Valencia happens, it's the Spanish taxpayer and the European taxpayer that pays out. So if you start to bring in repair into the insurance model, you're actively incentivizing the whole industry to shift its core business model from fixing things when they're broken simply with a check to paying for prevention, because it keeps the industry and the whole system in play. I think this is time for Europe to really look at it. The US will never do it because the US is running, there are 2 kind of DNA strands for insurance at the very origins of insurance. One is a European model fundamentally about mutuals. We look after each other and we create societal resilience. And the other is a financial derivatives model coming out of the Lloyd's coffee houses. We, Europe, really have an opportunity because we still have a huge percentage of our industry based on societal resilience to major on that. But that requires then really connecting the dots on European policy to incentivize that kind of model shift.
So want to hear back from the other panelists, but I promise to take a few questions and reactions from the audience, and I don't want to not feel the pulse of the room. So just going to quickly go to here. I want to hear, where do you think the priority actions need to be? Any reflections on what you've heard? We can take a couple of reflections quick and questions that then our panelists can come back and pull back into their final remarks. We have one down here. Anyone else? Everyone's shy. Where's John? I wanted you to speak. Yes, John, anything you've been hearing? Yeah, I pick on people, sorry, to get them to speak up. But first, Lydia, I think you wanted to quickly mention something.
I get just so interested in the difference between the southern and northern hemisphere. So I have a follow-up question on that. How exactly? So they hold. You said they are in control of the repair industry. So they own companies. Are it there only huge companies that are in every region that do the repairs? Is it like a monopoly, or is it like, how is it structured? Because in Europe right now it's nearly all SMEs doing the repairs. So I'm just like thinking it might be hard to kind of connect the insurance industry with the repair industry if it's mostly, the local carpenter doing the repairs. In Europe, I'm not sure. So I'm very interested about how the structure is there, and also about how, on your ideas, how it could work in Europe to connect the two.
Any other reactions on what you've heard? Yeah, please. And then one last one, and then we'll come back to the panel.
I would be interested in what Kirsten would say about what the Italian government is doing by obligating companies to buy natural catastrophe insurance, if that is a move that we should be seeing in every country, and if it should also apply extending it not only to companies, but also residential.
And yeah, just one last. Love the female.
Yeah, thank you.
Dominance.
Thank you.
Please.
Yeah, just to add on a little bit, I would be interested in absolutely thinking about a restructuring of the European insurance market. And I'm wondering about a pan-European reinsurance facility that would, as you said, we don't have often the capital in the national sort of systems to deal with the big ones. But we could have, I think, much more efficient risk spreading across Europe. And I also think that we could make warranties there. We could make it conditional, to be a part of that reinsurance system, that you do carry out those adaptation plans and do reduce your risks.
Okay, fantastic. Thank you very much. So let me go back to Vanessa. Be great, and we'll come back along the panel to give you the opportunity to answer some of those questions and also give your final remarks. So yeah, Vanessa, it'd be great to hear about the challenges on the ground that you have had in getting some of the public and private investment into adaptation and nature projects.
Yes, thank you. So yes, in the mission, we have run a program of support to the regional and local authorities on identifying adaptation projects and finding financing for them. Because it's all good to have an adaptation plan, but then to go from a plan to a project that is bankable is a huge step. And we've experienced on the ground how difficult it is, because we've given this support, or our mission implementation platform, MIP for Adapt, has supported 125 regional and local authorities. And in the end, they managed to come out with identifying financing for 30 projects. So you can already see the difficulty, the huge difficulty it is to identify projects that have a chance of getting financed, and then identifying where are we going to get the financing from. And there's many conclusions that I wanted to share, but I think in view of time, I really have to limit myself. We've seen, or the platform has seen, that local authorities focus so much on trying to get public grants, on trying to apply for projects and hoping that the public money will drop down. But there is simply not enough public money around to finance all the adaptation and climate resilience needs. So what the platform has tried to do is to help them say, focus. It's almost like a tunnel vision. We need public money, and if we don't get that, we can't do anything. But that's not true. It's up to involving your stakeholders locally. It's about getting the companies that will benefit from your climate adaptation investments around the table. It's about getting your citizens around the table, your farmers, the landowners, anybody who stands to benefit directly or indirectly from what you want to do as a local authority. Get them around the table, help them to see how they can contribute to the project with money or otherwise. It's getting financial people involved from day one when you want to think about identifying an adaptation project. Because usually adaptation in a local authority is done by one individual that has to cover also the creche and the sewage system and many other priorities. But they can't run it, and they won't, at the end of the road, implement the project. So it's about really getting the people, the team around the table of financial people, your budget people, and people who will run the project, project managers, getting them involved from the start, and also your investors and stakeholders. So that's one thing we've learned. And also think out of the box when it comes to financing. Think also, and that's a difficult message the platform has brought, think about your own budget. If an adaptation measure is really necessary, you will have to think about reshuffling your own budget. Think what you can do with your own budget. Integrate the project in your own budgeting, not as an afterthought. You work out a beautiful project and then you say, how? We don't find financing. So it's all these practical things. Think about it upfront. Get the right people involved from the start.
Great ideas. Very practical. Thank you, Vanessa.
If I may hijack a little bit, because on the insurance, which is not my specialty, but I really need to draw attention to the report that we now have out, or the reflection group on mobilizing private climate resilience financing is out. So in December, the final report was published of a group of banking and insurance, SME representatives, and so on. So the whole industry of finance and insurance has been sitting around the table for the last 2 years to think about exactly this. How are we going to overcome these barriers? And on insurance, there's very interesting recommendations that have come out. It's about data, for sure. It's about, we need to really centralize and get the climate data and also insurance data together and share it. And we need to connect the financial sector with the insurance sector, because they both sit on a lot of data. But if we can pull that together, we can really see how to improve the insurance coverage and how it will also lower the risk that the banks run on the credits. And you will see in the report also something that you've mentioned, a proposal for an EU observatory on insurability. So I think the insurance sector, I mean, that's what we see from this report, is really aware and is really, we think, is, I mean, at least that comes from the report, looking forward to working with the banking sector on tackling this problem and really on, as you say, and thank you very much, Kirsten, for saying how dramatic the situation is.
Yeah.
So thank you very much for this. And the awareness is coming. So that is great news.
Yeah, I loved Kirsten's urgency in this. And I think, if they've been sitting around for 2 years talking about this, what is actually going to happen,
It's not 2 years, it's 1 year. But okay. It was it was the first time actually that insurance and banking got together. Yeah. Together with SMEs, companies and investors.
Now, I'd love to hear, back from Kirsten, when you mentioned the 0.1%, how are we actually going to make that happen, and the regulation around Cornucopus to get the data and the satellite data. But I think first let me go to Sirpa to hear from you and what you've heard from now, and what's coming from the audience as well about the role of regulation as well, where it can come in, and maybe models that can be replicated.
Okay, very interesting questions. First, about the data. You know how weather forecasting functions nowadays, and it is compulsory sharing the data and putting it together and developing the models, and AI is helping and all that. And we know that the climate change is impacting the polar vortex, and this is seen in our weather patterns and so forth. You can create that on climate impacts and nature impacts and resource impacts and health impacts. So why don't you do it? Why don't we do it? Why don't we make it compulsory to share the information, public or private? Second is we need to make big joint projects, and we need to bind prevention and adaptation. Because there's the risk that when we are adapting, no one remembers actually the prevention, and actually it is either 2 degrees that is 4 in Europe, or it is 3 degrees that is 6 degrees here, that is basically game over. And then, for example, if you would have this kind of a joint agreements, I'll be not agriculture, just for example, buildings and the renovation wave, to make them energy positive and also recyclable, and renovate, starting with the social housing. The cities put a bit of the money, the private sector puts a bit of the money, and the government puts a bit of the money, and EU puts a bit of the money, and then all players. You can put the ball rolling, but it needs EU decision, member states, or at least the cities to be involved. And why not public banks could be used much better there. So it is the question very much how to leverage the action, how to use the data. And then my pet idea is, why don't you use the insurance knowledge? Make all projects, housings, compulsory insurance, but not compulsory for insurance companies to give the insurance. But you wouldn't get any permits or licenses if you don't have insurance, because it tells that is not handleable risk. And that will do a bit part of the trick.
Thank you, Sirpa. Kirsten, I think maybe all of the questions touched on insurance and what you provocatively put on the table. So great if you can come back on a few of the questions that were raised and what you've heard from the others.
Yep, I'm conscious also, I know we're at time. So I think, yes, the insurance industry is aware. No, it's not the first time this has happened. I was in conversations actually literally 20 years ago. The problem is that now finally a lot of those discussions were about this is possible, and now, oh shit, this is actually happening. And the biggest problem I see is speed. So it's not that this is not possible and it's not happening, is that it is moving catastrophically too slowly. And so we really need to speed it up. But I think in one very good piece of news, and I'll then come to the specific questions, I don't know whether any of you saw the news 3 weeks ago that AXA have teamed up with Lloyd's to launch the first reinsurance product to underwrite restoration of natural ecosystems. Now, those kinds of signals really shift stuff, because if you can start putting a whole Lloyd's consortium that establishes a precedent that makes it possible for all the retail insurers to start to copy it because the product's out there, and that is about underwriting restoration of national systems. It's underwriting actually the enabling conditions for restoration on which you can then build all of the pieces around the economy is equivalent to 80% of our, that nature underwrites 80% of our economy. So you need nature to keep that moving. So just to come back to some of those questions, I think, and this is the question of time, the trouble with the insurance industry is that it is incredibly slow to move and incredibly risk averse for all sorts of really good reasons. So if we want to really restructure the insurance industry across the European market, we need all levels of the system to work. So that means, to get to the 0.1% premiums, no competitor in the market will do this unless all competitors do it. So we need, as the Commission and as the Parliament, to get the International Association of Insurance Supervisors, the Financial Stability Board to the table to sit down and say, Europe will work the standardization and data conditions to make it possible to start to think about this. We think about this as a societal stability move because that's in everybody's interests. And then you create the condition for competitors to all do the same move together. And then they can do it together. And that enables then banks and insurance to come. So that is possible, and it has happened in other markets. And the reason why I'm speaking with a certain degree of conviction is because in places where, like Australia, for example, where you have this situation, if you try to insure your house north of the northern part of New South Wales, it costs you between $250,000 and $300,000 a year just for house insurance, because the correlation of risks of that northern part of Australia are so extreme that you just can't afford insurance. And that's 3 cyclones a year, storm surge, floods, hail, and bushfire all at once, every year. So the government had to work out, how do you get in and stop that? That's market failure. And that's why you start to have these big plays where you create standards where the whole industry agrees to subsidize nature-based solutions, housing rezoning, levees on rivers, active restoration of land and soil to reduce the surface temperature of the soil because that slows down cyclones. They all agree that that's a thing that they do. They subsidize that, not the premiums, and then that reopens the market for more affordable insurance. So it's about mass macroeconomic plays with macro policy plays combined with the individual instruments. And this is what I think we need to speed up the single market logic and the 28th regime for, because then we can really start to do that. And I do think a European-wide reinsurance system would really help. We can do that. There's no reason not. To your question around owning repair, that doesn't equate into monopolies. It equates into a conditionality and a requirement. It's just economically a lot more efficient if you are paying out on housing repairs or restoration of businesses and infrastructure or natural or wetlands every single year, 3 times a year. It starts to be in your interests to actually make that more cost effective. So then you set up owned businesses, partnerships, certifications, joint ventures, and you run it on a standard model so that you ensure that it's not just monopolized and price gouged. And you can start to really, really innovate. And you can start to pull forward prevention solutions and make them conditional on underwriting and premiums. So it's very possible.
It's fantastic. You're all so keen to speak more, but we only have 4 minutes left. So 1 minute for Sirpa, 1 minute for Vanessa, and then we'll wrap.
Thank you. Only to pick up what Kirsten said, we need to see the solvency and MiFID regulations and others, what this all means on that, and that needs to be on the list, and that's why we need to contact the FISMA.
Yes, thank you, Sirpa and Kirsten, for really saying that it has to happen now, because you know that in the last quarter of this year, the Commission is working on coming out with an integrated framework on climate resilience. So a package, thank you. Kirsten is saying we need it. I'm just saying in case you didn't hear it. It's going to be a package of different elements, including a legislative proposal. So it will be quite strong. And the message of the integrated framework will be, it's about joint risk ownership and joint action. It's not about the public sector has to solve this. It needs to be public and private together, and not just one sector in the private sector, but all sectors. So it's really about joint action. It's about joint risk ownership and risk action together. And it will also be about tools and data. That's what we're working on. And very importantly, we have an open public consultation ongoing for this framework. And everything that has been mentioned today, all the great ideas that have been mentioned, please put them into the open public consultation. It's so important, and it will be taken up. So your input is hugely valuable. The consultation closes the 23rd of February. So I'm sure many of you have already given input, but please do, and please be very concrete and bold with your suggestions. Thank you.
Maybe just one very, very quick build, because I think it's super important what you're saying. One of the challenges is if we only raise the risk, you genuinely have a capital market shock, and Europe looks a lot less bankable as a whole. So I think the other thing that you're saying that I want to absolutely emphasize on all of these projects, in the minute that you actually name the cost of risk, you have to have the solutions. Otherwise, the whole financial sector says, Jesus, Europe's a disaster. Let's take our money somewhere else.
Absolutely. So the framework needs to be about empowering as well, enabling people to cope with the risk and to become climate resilient. So all the suggestions and recommendations for that, like how do we then enable every actor, public and private, to take charge and work on climate resilience? That is what we're looking for.
So I see a nice action recommendation maybe coming out of this session. There's so many rich recommendations, I think, on what can be taken forward. I think maybe the organisers might want to take a role here to try to summarise some of what we're hearing and get it into that consultation by the 23rd of February, or from you individually as well. That seems like a great opportunity to take this forward, and I won't attempt to summarise all of those amazing recommendations and opportunities that have been discussed, but just really thank this panel for giving us a very exciting discussion around this, to Melissa for organising, getting everyone together for it, and Marta Vitcarelli, who's following online and wasn't able to join us today, but should have been part of this as well. So big round of applause for our panel. Thank you very much, and good luck for implementation.